Hey everyone, checking in on commodities. We're going to look at the dollar, gold, miners, oil, natural gas, and recently I looked into uranium, and I got to be honest, it didn't capture my attention in terms of the ability to trade it. There's not a ton of trading instruments. Yes, there's individual companies that are going to be subject to what the stock market does in addition to what uranium does, but just in terms of volatility and liquidity, it didn't capture my interest. There's plenty of other things that are more volatile and better for trading, in my opinion. So I am not interested in uranium at this point, but I'm going to check in on palladium. And that's a lot more bullish chart recently with a lot more percentage movement and a lot more volatility and watching for potential short-term consolidation. We'll look at that in just a moment, but just bouncing around, looking at different commodities and seeing if there's anything that I do like. But really what is limiting for most of them is instruments for trading. So obviously oil and natural gas and gold are the most popular, and miners, and we have ETFs. We've got inverse ETFs, leveraged ETFs, and for a lot of these other commodities, that's just not the case. So it's more difficult to trade these things, and I personally would stick to things that are easier. So looking at the dollar, on the weekly time frame, the bulls are attempting their higher low. So we knew anything above 95.16 keeps these little higher lows intact. The key resistance is going to be up at 97.37, and the bulls are going to try and follow through with this bullish candlestick from this week that has a long lower wick. Goal for the bulls this coming week is to break 96.60 and get this bounce going back up towards 97.37. So on the daily time frame, we can see this bounce right now is not changing the daily trend. We have the top and then clear lower highs on the way down, and we have to change that trend and form a higher low and then break the lower highs in order to be confident that our weekly higher low is established. So it's a great start, but we still have to change this daily trend. Otherwise, we're just looking for the dollar to set another lower high. Now, we had a scenario over the week, and I do the live market analysis, and one morning it showed up very clearly to me that we were going to be looking for the dollar to see a short-term bounce because we were seeing this new leg down and the short-term RSI levels were oversold. But what stood out to me was that on this weakness, this two-day dump to lower lows, gold did not see bullish continuation. So we know that gold is inverse to the dollar in most instances. And if we were going to see the gold bulls respond well to that dollar leg down, which was on Monday and Tuesday, then gold would have seen a bull break and made its way up towards the recent highs. That did not take place. So on Tuesday or Wednesday morning, we could clearly say, hey, this stands out that the bulls are not seeing upside, and we're not going to be in a good position to hold support when the dollar sees a bounce. We don't even have to see the dollar change the trend. When that dollar oversold bounce gets going, because we didn't get any bullish action on the dollar weakness, we can anticipate that we're probably going to see bearish action on gold on that dollar bounce. And that's exactly what happened, increasing bear volume, all-out dump, and a loss of a lot of support levels. The daily and weekly uptrend have now been lost for gold. Don't lose sight of the longer-term pattern that we've been watching, which is for this monthly equilibrium. And look at that bearish reversal candlestick last month, and now we're just starting March, but already pulling back from it. So again, we were anticipating the most likely scenario on this long-term monthly chart is a lower high compared to 1366, and now we're going to look to pull back and form a higher low compared to 1160. But we may pull back all the way down into the mid-1200s over the next couple of months. So I think that gold is going to be huge in terms of breaking this pattern and the volatility that's going to be associated with it, but that might not be until 2020. So it's absolutely worth watching this longer term pattern, and there is going to be opportunity while we stay within this tightening range because there's a lot of space within these levels. But when that break occurs, that's when there's going to be a lot of money to be made in this market, whether it's a bull break or a bear break, who knows? But again, it's going to take a while because this is the monthly chart for it to continue tightening up. And we could easily, pull back for 3 or 5 months, and then we could see another bounce for another few months to set another lower high. And like I said, just tighten up until 2020 or so. So that's something I just put on the back burner and say, keep an eye on the monthly gold chart because there is going to be significant trading opportunity in this commodity sometime within the next 2 years. And like I said, probably within about a year or so. So keeping that macro picture in mind, we were anticipating a monthly lower high is probably going to form. We were very extended heading up towards resistance, and even more so extended than we were last time, because last time we at least established higher lows and higher highs. This was a straight move from 1160 to 1350 essentially. So now we're pulling back, and the weekly time frame is clearly losing the higher low pattern. We're looking at the next support down at 1276, and even if we bounce here on the weekly time frame, the pullback is so significant that we would look for a weekly lower high to be set. And if we're going to be very convinced that the monthly lower high has been set, we're going to have to confirm the weekly change in trend with a lower high and lower low. So in the short term for gold, the daily RSI is getting down there. It's down at 40 at this point. The 4-hour RSI ended the week at oversold conditions. The hourly RSI pretty beat up as well. So short-term bounces are on watch for Monday, just looking for a bounce and a 4-hour lower high to be set. So obviously there's a lot of trading opportunity. The hourly RSI very crushed, but a lot of trading opportunity in the short term. But with my analysis, my style is always looking at the longer term timeframes, determining the most likely scenarios, and then zooming in to the shorter term timeframes to look for the clues that are telling me, yes, that is what is playing out in terms of the most likely scenario on the longer term. So I am anticipating that we are probably going to be losing the weekly uptrend and seeing that monthly consolidation to form a higher low. And we would say that, anything above 1230 would keep this a nice equilibrium to be watching. And again, it's all about that break once that tightening range does stop tightening up. So let's look at the miners on the monthly time frame because it's a very different picture, and we did break some resistances, but to confirm the trend change on the monthly, we've been in a downtrend at this point. Very clearly, we had a tightening range and then a bear break, and that's been taking place over the last 2+ years at this point. So in order to change the monthly trend on these miners, we had a nice bounce and we broke resistance, but we need the higher low and higher high confirmation of that monthly trend change. So in order to get that to happen, we're probably going to have to see gold break this equilibrium bullish. So if the monthly equilibrium on gold is not going to break for the next 10 months, let's say that is how it does play out, then we're probably going to stay in a tightening range for these miners during that same time frame. I don't imagine a scenario where we're going to see a clear bull miner higher low and higher high on the monthly time frame without gold breaking its chart monthly. So we're pulling back on these miners, breaking a weekly support down at 2184. GDX, the next level is 2022. Again, there'll be short-term bounces on the way down. We're extended with the amount of red days we've seen in a row now. 4-hour RSI on GDX, close to oversold, not as beat up as gold, probably due to the market being so strong overall. But we lost a key support of 2184. So on the daily time frame, when we do bounce, we're just going to look for a lower high to be set due to the significant shift in momentum that has taken place. GDXJ, very similar. Pullback on the weekly time frame. Daily chart, pretty extended. 3156 key support broke. And again, when we lose the daily higher low pattern, when you bounce, you look for the lower high to form and for the bears to keep some of that control. Look at the amount of bear volume that we've seen here. That's a solid chunk of volume, especially looking at the last leg up. Not very impressive for the bulls in terms of volume, and the bear volume from that top far outweighing the bull volume on that last leg to get up there. So I would be cautious, bull miners, personally. This is a clear shift. Like I said, there will absolutely be short-term bounces on the way down to cool off RSI levels, but that monthly chart for gold is the backbone of my analysis for gold and for these miners, and it is looking like the monthly chart is going to consolidate to need to form a higher low. Checking in on oil. Oil on the weekly chart, pretty healthy, pretty same range the past 2 weeks in a row. Looking at the daily uptrend to see if it's still maintained, and the answer is it is, but we do have a double top, 57.79 and 57.85. And the most important support level is $55, because if we break $55, we lose the daily uptrend after that double top, and that tells us weekly consolidation is coming. So a weekday on Friday, but it's all about $55 this coming week. If we lose $55 support, we zoom out to the weekly time frame, and we see if the bulls can maintain a higher low compared to the last weekly higher low of 51.20 or 51.22. So key support test on oil to be watching. Let's see what the RSI levels are after the big red day on Friday. The hourly RSI got to oversold and then just traded sideways. So if we were to start weak and head down on Sunday night or Monday straight to 55, we will be watching the hourly RSI pretty extended, and the 4-hour RSI will be approaching oversold as well. So we'll see if there's a potential bounce play off of that $55 support. It all depends on how fast we head down to that level. Natural gas weekly time frame, anything under 374 is just a lower high. So we can anticipate that this bounce, while it is less likely now that it is a bear flag, we can anticipate that it is just going to give us a lower high. So in order to change the trend on the weekly time frame for natural gas, we're probably going to have to bounce and set a lower high compared to that level, form a higher low compared to 257, our bottom, and then change the trend. So that's not going to happen anytime soon on the weekly time frame. Doesn't mean we can't see further upside. You know, we could see the weekly lower high form anywhere from 286, the current top, all the way up to, 325, 330. So there is space for the bulls to work with, and they did shift that 4-hour momentum. I was going to be looking to play this on Friday, but unfortunately the bull break occurred while I was live, and it was a quick bull break, and I believe it was right before the bell rang. But we had a high, low, look at this equilibrium on the 4-hour time frame that did break bullish on Friday. So high, low, almost a double top, higher, low. There's your bull break, and now the bulls just have to keep the 4-hour uptrend in their favor. 2774 is the last higher low, so need to keep that support level. And from here, we're looking up towards 3 psychological as resistance, because on the daily time frame, we're getting over exponential resistances, the 12 and 26 period. We're looking for the next daily resistance level up at 2998. So the bulls do have some space to work with. That $3 psychological level will potentially be on watch. And again, bulls just want to maintain the 4-hour uptrend at this point and get follow through to start this coming week. After that bull break, didn't get a whole lot of follow through on Friday. You can see the bulls used up all their let's try that again. The bulls used up all their morning momentum and then tightened up in an equilibrium for the rest of the day. Palladium. So that's the weekly chart. That's why I'm interested in Palladium. We've gone 90% over the last 8 months or so. That's some nice volatility. That's some nice opportunity. And even if you don't have leveraged ETFs to be playing it, certainly there's a pretty penny to be made on moves like that. At this point, there's no bullish entry in my opinion. It's too overextended. And I'm watching the pattern. Whenever we see this kind of pattern, it makes note to keep an eye on the weekly higher low every candlestick. And it's looking like just visually here to me that we have had 15 plus weekly candlesticks with every single candlestick a higher low compared to the previous one. So when we break that pattern, it will be a clear indication that weekly consolidation is going to be coming. And that will be due at this point because, again, we're so overextended with the RSI levels so high. When we lose the daily uptrend, that's an indication that weekly consolidation is coming. 1517 is the last daily higher low for me. So if we break 1517 next week, we lose the daily uptrend, we zoom out to the weekly chart, and we look for a weekly higher low to form, perhaps somewhere in the mid to upper 1400s, and looking for, again, just healthy consolidation. But if I were looking to play Palladium, it would be on a weekly pullback at this point, and I'll be keeping an eye on it bearish just for a short-term trade, only if we lose the daily uptrend, and then we'll see if we can get a bullish entry once that weekly consolidation gives us a healthy higher low. So keeping an eye on it just because, again, that volatility and the 90% move over the last 8 months, and yes, uranium does see some movements, but it's not nearly as significant in terms of percentages. And just looking at uranium futures here, we went from 20, so we saw a 50% move over that same period of time. So nothing to sneeze at, decent, but again, just need some trading instruments with lots of liquidity, lots of volume, getting spoiled with UWT, DWT, UGAS, and DGAS, and not having those available for these other commodities makes them less attractive for trading for me personally. So I hope you have a good weekend, and I hope you're doing well, and we'll check back in. Keep an eye on that monthly chart for gold because gold is going to be a hot topic of discussion when that monthly equilibrium breaks. And again, significant volume and volatility will be associated with that break, and it could mark a new multiple-year bear trend or a multiple-year bull trend on gold. So it's going to be very important how that monthly time frame breaks. Thanks again. We'll see you soon.